Good morning, everyone, and thank you for choosing today's market analysis. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, September 26, 2023. European stocks slide. The Stoxx 600 benchmark in Europe retreated by 0.8%, amplifying concerns about the region's economic outlook. Simultaneously, U.S. equity futures also declined, setting the stage for a potentially extended losing streak for the MSCI All-Country World Index, which tracks global equities. This downturn represents one of the longest losing streaks in the past decade, underscoring the fragility of investor sentiment. Surging Treasury yields and dollar strength. One of the most significant developments was the surge in the yield on 10-year U.S. Treasuries, which rose by 2 basis points after hitting a 16-year high the previous day. This rise in yields was accompanied by the Bloomberg Dollar Index's resumption of its ascent, reaching levels not seen since December. These trends have been driven by expectations of higher interest rates and their potential impact on various asset classes. Dimon's warning and Moody's concerns. JPMorgan Chase & Company's chairman and CEO, Jamie Dimon, added to the market's unease by suggesting that U.S. interest rates could climb as high as 7%. Such a worst-case scenario could catch both consumers and businesses off guard. Moreover, Moody's Investors Service issued a warning that a potential U.S. government shutdown could negatively affect America's credit rating. These factors created additional uncertainty in the markets, especially as the end-of-month deadline for resolving the government funding issue looms. Crude oil prices and inflation concerns. Crude oil prices face downward pressure for a second consecutive session, raising concerns about the potential impact on inflation. As oil prices rise, there is a growing fear that this could further exacerbate inflationary pressures, making it challenging for policymakers to consider reducing interest rates in the near future. Hedge funds have increased their exposure to oil in anticipation of tightening supplies and increased demand. U.S. interest rate expectations. Neel Kashkari, president of the Federal Reserve Bank of Minneapolis, expressed his expectation that U.S. interest rates would continue to rise later this year, citing the robust state of the U.S. economy. His sentiments echoed those of Boston Fed President Susan Collins, who also indicated that further tightening measures were not off the table. Fed Governor Michelle Bowman added to this sentiment by suggesting that more than one rate increase might be necessary. Challenges in Asian markets. In Asia, concerns about the property sector weighed heavily on Chinese markets. Hong Kong's Hang Seng Index dropped to levels last seen in November, reflecting the ongoing challenges faced by the region. Chinese mainland benchmarks also recorded losses, contributing to a subdued mood in Asia. Chinese property sector turmoil. Chinese property developers continue to face headwinds, exacerbated by China Evergrande Group's failure to meet a debt payment and the detention of former executives. These events intensified concerns about the sector's debt burden and raised fears of a potential global economic slowdown as China, the world's second-largest economy, faces economic challenges. Regional stock markets respond. Stock benchmarks in Japan, South Korea, and Australia all experienced declines, with South Korean equities leading the way with losses of up to 1.3%. The region's equity markets remain sensitive to both domestic and global economic developments. As global financial markets grapple with rising Treasury yields, dollar strength, and uncertainty surrounding interest rates, investors are closely monitoring central bank actions and economic data for indications of future market direction. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Coinbase expands into Spain, awaits EU regulation. Coinbase, one of the leading cryptocurrency exchanges, has taken a significant step in expanding its services by registering with the Central Bank of Spain to offer exchange and custody services. This move, announced on Monday, is essential for Coinbase as it positions itself to tap into the Spanish market. Spain, like many other European nations, is moving towards increased regulation of the cryptocurrency sector. While the country currently lacks a licensing framework for crypto businesses, it will be obliged to develop one in line with the European Union's MiCA regulation, scheduled to come into force in 2024. Coinbase's registration with the Bank of Spain underscores its commitment to complying with anti-money laundering standards and regulatory requirements. Sam Bankman-Fried's ongoing legal battle. Sam Bankman-Fried, the founder of FTX, a cryptocurrency exchange that recently faced a major collapse, is facing legal troubles and has once again sought temporary release from jail. Bankman-Fried's legal woes began in August when his bond release was revoked, and he was detained following allegations of witness tampering. Despite a request to overturn this decision on September 12, his plea was denied. This recent attempt to secure a temporary release adds another layer of complexity to his ongoing legal battle. The situation underscores the increasing scrutiny and legal challenges faced by prominent figures in the cryptocurrency industry. JPMorgan CEO warns of high U.S. interest rates. Jamie Dimon, the CEO of JPMorgan, a global financial giant, has sounded a cautionary note about the potential consequences of U.S. interest rates rising as high as 7%. Dimon's warning comes at a time when the Federal Reserve has been on a rate-raising spree since March 2022, with the benchmark borrowing cost now in the range of 5.25%–5.5%. This tightening cycle played a role in last year's cryptocurrency market downturn. Dimon suggests that the Fed might continue raising rates to combat persistent inflation, and such actions could have adverse effects on the global economy. His remarks reflect concerns about the delicate balance the central bank must maintain to stabilize the economy while avoiding over-tightening. Ether shows positive technical signal. In the world of cryptocurrency trading, Ether, ETH, is showing signs of potential strength. Technical analysis conducted by Fairlead Strategies founder, Katie Stockton, indicates that Ether may be on the cusp of a bullish trend reversal. The DeMark Analytics TD sequential indicator, known for signaling market turning points, has issued a counter-trend buy signal for Ether. This development suggests that Ether could defend the weekly Ichimoku cloud support, $1,580, even amid other indications pointing to a deeper price decline. Stockton's analysis provides a glimmer of hope for Ether investors amid recent market volatility. Ethereum Layer 2 scaling solutions surge. Ethereum's Layer 2 scaling solutions are witnessing significant growth, as illustrated in a recent chart. The average transactions per second, TPS, on Layer 2 scaling products have surged to record highs, outpacing the mainnet's capabilities. This trend bodes well for Ethereum's long-term scalability and efficiency, as Layer 2 solutions offer the promise of faster and cheaper transactions. As Ethereum continues to evolve and address its scalability issues, Layer 2 solutions are playing a pivotal role in enhancing the network's capacity and overall performance. In conclusion, we'd like to thank you for watching today's market analysis. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.